The Trading Bell, thank you so much for always being tuned in to these conversations. Now, right here at the NSE, and FYI, for your information, the exchange itself is also listed here in this particular market, and they did a fantastic year, 2025. And the CEO is also here to also unpack the numbers and the drivers behind it, as well as speak about the current things we're seeing, with the state of the market as well, and much more. So welcome to the Trading Bell. Frank, it's good to see you as always.
Good to see you again,
Yes.
Maina.
Yeah, absolutely. And fantastic numbers. 2025 seemed to be good tidings all over. And I just wanted you to paint a picture of some of the key drivers you saw. Then we can delve deeper into some of these particular movers.
Okay,
Yeah.
okay. First, you're right. Actually, our results for 2025, the year that has just gone by, were the best yet.
Yes.
Very, very, very good results. Our profit after tax was up 134%. Our dividend is the best dividend issued by the NSE for a long while.
Yeah.
Our earnings per share also improved.
You're right.
We crossed the billion shilling revenue mark for the first time in NSE 70-year history.
Yeah.
And so the 2025 results for sure were quite incredible.
Absolutely.
And I think our shareholders will be happy.
Yes.
Or are happy.
Happy, really.
Will continue to be happy. What drove this?
Yes.
Of course, the base factors point to a stable, first of all, a stable macroeconomic environment.
Yeah.
I think I have shared before that you cannot operate an exchange like ours successfully within the capital markets ecosystem if the macroeconomic environment is volatile or unstable.
Yeah.
So if you look at inflation, if you look at, so in Kenya, inflation very well managed.
Yeah.
The interest rates regime is clarity there, and it's also very well managed.
Yeah.
FX reserves, highest since independence, the exchange rate stable.
Very stable.
Among other macroeconomic factors. Now, so the policies by our government through the National Treasury and the Central Bank of Kenya have really laid the foundation for a stable macroeconomic environment.
Okay.
Then on top of that, now you layer the strategy that we've been driving, the new strategy. We've just finished our first year of the new strategy, and you can see the results.
Yes.
So our strategy and the execution of that strategy with my team, of course, in 2025, the primary focus was on deepening or activating our domestic investor base, bringing in more listings, raising awareness about the exchange, and the opportunity at the exchange, opening up access, and then, of course, trying also to minimize some of the other friction points around opening accounts and being able to trade.
Yeah.
So if you look at the macroeconomic environment, our strategic push, you can see the results.
Yeah.
Okay.
Yeah.
So, but of course, I have to also give a lot of credit to our board for the oversight and guidance and advice that they provide.
You're right.
And of course, my team.
Yes.
Who are the ones who wake up every day to deliver those results. Okay. So all these are the factors that have really contributed to the success that you've seen and that we continue to see.
Okay.
As well, of course, as our work around attracting foreign capital into our market as well.
You're right.
Which has also, for 2025, that also was quite well done as well.
All right.
So yes, these are the factors.
Okay. I love that you have highlighted about the investor confidence and the likes that have also driven to this.
Yeah.
One of the key things is actually the composition of the investors. What are you seeing, looking at the domestic versus the foreign investments? Are you seeing some changes across?
Yes. Yeah. Actually, yes. And significant changes at that.
Good.
When I joined the NSC, it's almost 2 years now. It feels like I've been here for 10 years. I'm finishing my second year at the end of this month, April. Yeah?
Yes.
But when I joined in May 2024, the foreign investors accounted for between 60 and 70%. So on average,
always high.
Always higher. In some counters, 80% even.
Yeah.
And then we formulated our new strategy and started implementing it. Ideally, that's not ideally. The focus of that strategy is to revitalize our markets, and in revitalizing our markets, intentionally balance out between foreign investors and local investors. We closed 2024, the year I joined, with more or less 50-50. That's 55% foreign, 45% local. Today, actually, end of 2025, we were 63% local and 37% foreign.
Yeah.
Okay, so you can see it's changed.
Yeah.
That said, we do need foreign investors, and so we need to have a good balance.
Absolutely.
One, because their ticket sizes tend to be quite high.
Yeah.
And number two, in order for us to issue certain instruments and also bring more visibility to the NSE, it is important that we have other investors beyond Kenya also participating. So that's working out quite well, actually. Okay. The intention, though, and just to be clear, is we want to do a lot more work around the local investors, particularly retail investors. And for us, we are seeing we've defined local in a different way. We've defined it as domestic here, East African, and diaspora. Okay. So, but it's because of how that segment looks at our market and comes to our market. So we think that keeping that definition of domestic, East African, and diaspora enables us to actually revitalize the market in a very, very sustainable way.
It's a good mix. Lovely there. And really, I'm sure the goal is still the 9 million. And after this, probably our viewers should know that Frank has pushed an amazing way of reaching all of you so that all information about investing here is coming your way. We shall be disclosing that in a moment.
Sure.
So Frank, let's move on a little bit. And just looking at those particular numbers and everything else, it doesn't seem like the macros, if I may use that word in a big way, in the favor, especially now this year, because we can see, even right now as we speak, the country is talking about fuel now.
Yes.
The war is up there. And as you've said as well, you want to balance this foreign investors inflow versus domestic as well. Definitely has an effect. And one of the key indicators is actually in the markets.
Yes.
They speak big time.
True.
What are you observing and how are you navigating this?
Okay. Anyone running an exchange like ours, anywhere on this planet, is vulnerable to geopolitics.
Absolutely.
Because at the end of the day, you're talking about capital. And capital and the flows of capital are very, very, very vulnerable to changes in the geopolitical environment. That is to say that this is not unique to NSE. Okay? I'm not hiding by it, but I'm just trying to say we're not operating in a vacuum.
You're right.
Of course, the the Middle East situation has impacted exchanges around the world, including ours. What have we seen specifically in Kenya is foreign investors exiting.
Yeah.
And that's being primarily being also seen across other exchanges in Africa. I host at the NSC, we host the Africa Securities Exchange Association. So we have these meetings with our peer CEOs in the continent, and it's been the same. That since the war, in the Iran-US-Israel war, you've seen exits of capital from emerging and frontier markets. And that I think tends to happen whenever the situations like this happen. What's interesting is that exit for NSE is actually been taken up by domestic investors. Oh. Yes, that's why I said that actually it's now, we are having 34% and 66% foreign. So it's both a good. I'm not saying war is good. It definitely is not. But I'm saying that the beauty is that the slack has been taken up by foreign investors. Okay. The second thing we are seeing is the need for exchanges like ours to be more diversified in terms of the foreign markets that invest at the NSE. Traditionally, we have heavily relied on, from a foreign investor perspective, on Europe, UK, US. Our plan, which we started last year, is to activate Middle East and Asia.
Okay.
So that the foreign flows that come to NSE are essentially reflective of the entire world, essentially.
Yeah.
Without leaving any of those regions untapped.
Yeah.
And in that way, you build a bit more resilience in terms of foreign investors.
Yeah.
The last thing to also mention, of course, is that geopolitical issues like this, then of course, come home to roost through the macroeconomic issues, but also micro. Macro in the sense that, if the cost of energy goes up, that impacts inflation. You will feel it in your pocket, you'll feel it in my pocket. We are seeing it on the pump.
Yeah.
It, of course, impacts other themes like food. It impacts tourism for us, for example. It impacts ability for us to trade, for example, with sell our goods to places like Middle East that are big markets for our agricultural products, for example.
Yeah.
So our thinking is that even if the war stopped now, the impact will still be felt probably for the rest of the year. We are keeping close, as a market, we are keeping close to the responses from a policy perspective that our government is putting out. Okay. We are also offering our input, and in that way, enable us to be more to be less reactive and more proactive in terms of what measures are put in place.
Okay.
What I can say though is that the opportunity to invest is even more real. Why? Once this issue is sorted, investors will rush back. That happens every time, Maina.
Yeah.
So actually,
they will come here.
So if anything, I think it's Warren Buffett that said, invest when people are leaving and leave when people are coming. So, do with that information as you may.
That's a good tip.